This is a presentation for the nodos 2022 Congress, and this is the article presented in Spanish into the Congress, but the video will do it in English so that many more people can follow. Ciclo actual de mercados, ordinario o extraordinario. Is the actual moment of the markets ordinary or extraordinary? I will refer mainly to the two of the main assets that are now attracting the attention of the media, which are the stock market, the Dow Jones in this case, and the Bitcoin as the main crypto asset. First, how we will try to consider if the moment of the market is ordinary or extraordinary, using a concept that is quite new, that will be the concept of probability of disinvestment. This is a concept that will help us to understand if we are moving at the top or at the bottom of the function of distribution of the daily returns for a market. First, what we do is to calculate the cumulative consecutive number of days with positive or negative annual returns. A number of, for example, 200 positive returns will mean that during 200 consecutive days, market has had an annual return calculated daily positive, and the other way around. On these numbers, we will calculate the distribution function so that we can more or less calculate as well the probability. If I have the distribution function and I have a given number of days, let's say for example 300, I will be able to calculate in this distribution function what is the amount of probability that is considered. That will permit us to validate whether this cycle is normal or not. The database is very, very big because we consider the database for Dow Jones Index since 1898, January of this year, which is the maximum amount of daily data that can be obtained right now. In the case of cryptos, of course, the Bitcoin exists since 2008, 2009, and we have the database from the very beginning of the market. So that means that we can compare with a great amount of numbers whether the cycle will be a normal or a abnormal situation right now. Here we can find the results for the stock market. In this case, as you see, this is the number of days in a positive or negative cycle. If we see this, the beginning of this chart will be, as you see here, what is happening right now, even though we have this feeling of probably an incredible market behavior since probably 2016, which is true. In reality, when we see the behavior of this amount of days in a positive way, or negative, in this case positive, we see that the behavior of the market is very, very normal, slightly over the mean, over the average of the data series for positive cycles, but of course, nothing out of the blue. What is really could be considered more or less a little bit extraordinary will be that we have at least 3 very big moves, not the best days ever in the stock market, because we have several moments in time when the number of consecutive positive annual returns have been closer to 900. In this case, we have a positive market of 800 days in the 2012 to 2014 cycle, then again something like 600 days till 2018. Of course, then we have the COVID, and finally a very last one of almost 350. Even if we added without this COVID effect, these 2 cycles, wouldn't really be at the very top of the market. So in terms of days in a positive or negative mode, there's nothing extraordinary in this move for the stock market. If we consider, in this case, the movement of the market, as we see in terms of probability, in the very top of the market, we were at 80% of probability, being 101, if you prefer, being 1 the very top, so the best movements of the market, and 0 the very worst movements, where the minimum or maximum negative behavior were attained. In this case, we are moving very fast, as you see. In the during the beginning of 2022, we approached to 80% of probability, and then in the retracement of the markets that happened immediately after this maxima, just before summer 2022, we were relatively low in terms of probability, around 0.18%. So that means that it is nothing extraordinary, but because, as you can see during the history of the markets, this is a very normal behavior, so that the probability of this investment is moving very, very far and very, very rapidly from maxima to minima. If you follow me, if we go to the 30s, for example, we find markets at the very top of probability. 100 of probability of this investment means that they have been increasing value in annual returns for at least 900 days. And suddenly we come to the other side of the probability, just a relatively small amount of time. In terms of total data series, we see that, of course, there's a positive bias. That means that we find very rarely, only once in history, a move of negative consecutive annual returns only once more than 500 days. And on the other side, we can see that we have at least 20% of probability more than 300 days, and still at least 10% of probability with more than 500 days of probability. What does it mean? Positive bias. That explains, of course, what is happening. As for the stock market, what is happening now in the markets, although we might have this feeling of extraordinary behavior, it is not the case. When we see, for example, how the different variables could correlate, I have considered what is the return today, what was the return 250 days ago, 1 year ago, more or less 256 sessions of the market, what is happening with volatility, and what happens with the probability of this investment a year and the volatility 1 year before. So, of course, if I want to explain the profitability of today's market, I will have to explain it in terms of what happened a period before. As you see here, we obtained that return of Dow Jones is relatively scarcely correlated with most of the variables, which is quite similar to results obtained by other authors. Of course, this is something that is very known, that it is difficult to find variables that explain fully the behavior of the stock market. But as you see, we find that volatility of today can have a certain degree of explanation in terms of what is going to happen with return of Dow Jones, positively correlated in this case. And as you see, there's the second factor of explaining today's annual return is the probability 1 year before. So in a certain way, this is really quite explanatory factor. And as you see here, we find again that the probability of default 1 year before today has some effect on what is going to happen today. So that means, for example, when we are we have attained 90% of probability of disinvestment. So that means we are, for example, 800 days of consecutive positive returns. Probably volatility today will be lower because the market will have probably diminished or corrected or retraced, or at least wouldn't have such possibilities of increasing value. As we explained, so we wanted to compare this with results of Bitcoin. Here we have the move of Bitcoin in these days, increase and decrease. And as you see, again, it has nothing of extraordinary. The actual retracement, we found, of course, worse periods of almost 2 years of trading in the past. So the actual movement probably it's not really something that can be considered extraordinary. The same happens with PD. Of course, the most incredible moment in history of Bitcoin is when it reached the maxima in the period previous to the futures, the start of the Chicago futures trading. But the actual move could be considered quite modest in terms of what is happening. And of course, I would say that could be considered as well relatively normal. When we compare this with the cumulative probability of disinvestment, we see that we found that at least 20% of total behavior happens between these very big moves of more than 500 days. Remember that in the stock market it was something like 10. Here we find much stronger correlation. What does it mean? It means that the moves of Bitcoin has been explained much more by statistic reasons than we can believe. There has been a lot of quantitative trading and a lot of people just behaving because of technical analysis. We see it here. So we see how the correlation, for example, between the volatility and the return itself is very big. In this case, for example, probability of disinvestment really doesn't have a lot of influence on today. It seems that the market is not behaving like this, taking into account what happened with the probability of the market 1 year before. But as you see, probability of disinvestment is relatively important in terms of explaining the return of the same period. So when we consider the probability of default 1 year before and the return of BTC 1 year before, then the results are very important. But again, it seems that the probability of disinvestment of Bitcoin explains quite a lot of volatility today, which is quite consistent with our findings for the stock market. Here we have a very simple regression, taking into account all these factors mentioned in order to explain what is happening with actual return. Very interesting because we find that this kind of correlation has an adjusted R of more than 50%. And as you see, every factor will be statistically of significance, as you see with the T statistics and the p-values. So that means that really we can probably have a feeling that Bitcoin has been moving in with other quantitative effects. But as for the results that we wanted to conclude, there's nothing really extraordinary in this specific move of the market, in spite of everything that has been happening in the last